Welcome everyone to MLA Sheep Projections webinar for 2024. Today we'll be discussing September's update for MLA Sheep Industry Projections, which were released on Tuesday. Thank you for taking the time to attend. My name is Angus Murray and I'll be your moderator for today's webinar. The team presenting is Erin Lukey, Senior Market Information Analyst, Emily Tan, Market Information Analyst, and Tim Jackson, Global Supply Analyst. We'll pass to the team now to get a quick introduction before the presentation. Erin, would you like to start us off?
Morning, everyone. My name is Erin Lukey. I am, as Gus mentioned, the Senior Market Information Analyst in the Market Information team here at MLA. So as a team, we provide industry with market insights using national livestock reporting data and a bunch of other data sources. And we do this through a number of reports. So we have obviously these projections as well as co-products pricing reports, a state of the industry report, and a couple of producer intention survey for both the sheep and cattle industries. And then we also do weekly articles talking to our live pricing indicators. I've been with MLA for about a year now, so I've been through this process once before. But yeah, looking forward to today. I'll pass through to Em.
Yeah, as Erin mentioned, my name's Emily and I'm the Market Information Analyst. And I work with Erin looking after domestic supply for everything up until the processor. I, in particular, look after the Beef Producers Intention Survey, as Erin mentioned, and she looks after the Sheep Producers Intention Survey. So I'll be passing on to Tim.
Hi, my name's Tim Jackson. I'm the Global Supply Analyst in the Market Information team, and I look after all of our export statistical reporting. So it's, different types of export data and pricing, and also look at what's happening in other countries and how that impacts demand for Australian red meat, and what that means for Australia moving forward. So back to you, Angus.
Perfect. Thanks, guys. The team's contact details will be made available at the end of the webinar. If you have any supply, price, or production-related inquiries, please reach out and we'll be happy to assist. Before we start, I'll cover off on a few housekeeping points regarding today's presentation. All participants will be on mute throughout the presentation. However, please note there is an option to submit your questions at any time by scanning the QR codes on each of the slides. This will take you to our Slido platform. This webinar is being recorded and a copy of the recording will be uploaded onto MLA's website and to YouTube if you wish to rewatch or share the webinar. If you have not obtained a copy of MLA's September sheep projections, you can source it by going to MLA's website under the Trends and Analysis page, or again, feel free to reach out to anyone using the contact details at the end of the presentation. We'll now begin the webinar. Today, Erin, Emily and Tim will cover sections of the sheep projections document in detail. My apologies. We have a technical issue at my end. Erin and Emily will discuss domestic insights, starting with an overview of the updated document headlines and how weather and additional costs have impacted production over the year. Following this, we'll provide insight into our data collection through the Sheep Producer Intention Survey, and then finally, they will cover the detailed flock and production projections over the forecasted period. Finishing off, Tim will cover global trade and our closest competitors. A reminder that there will be opportunity to ask questions throughout the QR code. Please do throughout, and it really helps us sort of line them up throughout the document ready to answer. All right, let's start with Erin. Can you provide us an overview of the headline figures for the update and go through what has changed from the last release?
Sure, thanks, Gus. So since our last release back in March, we've made a few edits to our 2024 estimates and our forecasts. A combination of new information supported these changes, which includes new data from the Sheep Producer Intention Survey that Em will talk to. We've also conducted targeted consultations with sheep industry stakeholders in South Australia and Victoria, as well as virtual consultations across New South Wales and WA. We have recently released data from the ABS covering financial year slaughter and production. And then most importantly, we know how the autumn and winter seasons eventuated across the country. So the 4 key points from our document are that the flock is estimated to have remained flat from 2023 to June 24, which is reaffirmed this year as the largest flock since 2007. We have lamb and sheep slaughter still forecast to reach record levels this year and next due to a changing flock dynamic. And then lamb and sheep production will follow this slaughter trend, reaching new records, while carcass weights will ease to trend weights.
Thanks, Aaron. The largest flock in 17 years is certainly an impressive number. How do we get to this point?
So investments in genetic and a move to more productive practices have had a huge impact on the growth and the strength of our flock. At the same time, weather has impacted our ability to rebuild, affecting joining and marking rates, lamb and ewe survival, as well as this feed availability. So on a national scale, we've had 3 consecutive years of positive rainfall, which has been consistent and widespread. Weather also acts as the largest driver for decision making, having an impact on growing, downsizing, or people exiting the industry, as well as joining rates, ewe retention, and weaning decisions. These decision drivers are much harder to quantify when we run our forecast model, so this is why we rely on our sheep producer intention survey as well as consultations to get an understanding of the current environment.
Amazing. So weather is a very important part of your forecasts. How have the conditions of the past 6 months impacted the current flock?
So coming into this year and through the first 6 months of 2024, conditions varied dramatically across the country. Sheep producing regions across WA were the first to feel pain, experiencing a tough 2023 spring, a dry summer and very little rainfall up until the mid to tail end of autumn. Spelling was a lot more common across the state as the start of their joining season was coming from a low feed and water base. Then we have regions across South Australia and Western Victoria, which saw delayed dry conditions. Breeding ewe stocks were high on the tail end of the rebuild, and after experiencing a positive summer, producers acted as normal, joining their ewes, though unfortunately conditions dried up quickly and unexpectedly, which led to much lower marking rates. So, and then by contrast, there's also been some positive conditions across other sheep producing regions. So generally pastoral areas in South Australia and New South Wales, and then also much of Queensland and New South Wales have had consecutive positive seasons, including this one, and that's supported the sheep flock to maintain at its peak.
Nice. What is the climate outlook for the short term, and what do MLA expect over the forecast period?
So the Bureau of Meteorology's 3-month forecast out to November, which is on the right, is looking positive for the eastern states. And if this eventuates, it would provide relief for those southern regions, while New South Wales and Queensland would continue on their positive trajectory. Looking further ahead, it's quite hard for us to understand where we are in the current weather cycle. And so after 2024, MLA have made the assumption that the next 2 years will be average or slightly below average, but this is made with no forecast of a drought or intensive period, or intensive wet period, sorry.
Thank you, Aaron. Moving now to the macroeconomic issues highlighted in the report. Emily, the document provides an overview of the current financial environment. How would the sheep industry be impacted by the current interest rates and inflation?
So absolutely. So in the projections document, we look at the current inflation and interest rates. Firstly, the RBA interest rates have remained at 4.35% for the past 6 months. This is the highest it's been in over a decade. Looking ahead, the big 4 banks are expecting cuts to start around the end of 2024 or early next year. In July, inflation was reported at 3.5%, easing slightly from June. This remains above the target inflation rate of 2 to 3%. Elevated inflation will continue to put pressure on industry, driving up costs and impacting businesses' decision making.
So you mentioned the impact of inflation and interest rates. What about our current exchange rate and how it's affected the industry?
So the current exchange rate between Australia and the US dollar remains at $1.53. This has had the impact of making exports cheaper and increasing the price of imports. this weakening of the Australian dollar has subsequently increased the competitiveness of Australian lamb.
Very good. And so how has changing input costs impacted the sheep industry in 2024?
So input costs are increasing rapidly, putting producers in more of a difficult financial position. Council rates are a growing cost to small businesses and were identified as the fastest growing operating costs in our consultations. Fuel and electricity continue to put pressure on operating costs. According to the ABS, electricity costs have increased by 4% compared to the beginning of the year. Diesel prices across August were 4% below this time last year, though remain a significant cost up and down the supply chain. Elevated fuel prices are expected to continue to impact beef production through higher transport and operational costs.
Okay. So input costs clearly have an impact on production and final profitability. Livestock pricing has been a very volatile input cost. How's this volatility impacted confidence, and has it changed much over the past 6 months?
So over 2023, rapid price movements and an uncertain climate outlook have made producer decision making more difficult and eroded confidence in the market. In contrast to the market price volatility in 2023, this past year, we've seen more stable livestock pricing across sale yards. At the same time, supply has returned to regular seasonal trend movements. This is likely that producers will enter the next phase of decision making a bit more cautiously than they did in the past year.
Okay. We've now discussed price. We will now discuss price forecasting that has been published for September. As MLA are unable to participate in price forecasting, the team has taken the opportunity to approach top industry analysts for their independent forecasts. Emily, are you able to elaborate on what these analysts see happening in the sheep market?
Oh, yes, absolutely. So as you mentioned, MLA doesn't do price forecasting, though through our projections process, we do include an aggregated analyst price estimate from respected analysts across the industry. So that includes Rabobank, Rural Bank, Mercado, and Episode 3, who have provided their price forecast for the National Heavy Lamb Indicator and the National Trade Lamb Indicator, which have been aggregated with a high and a low range. So the heavy lamb indicator is forecast to ease by 750 cents per kilo carcass weight, which is 10% below current prices, with an upper aggregated estimate of 860 cents per kilo carcass weight. The trade lamb indicator is forecast to reach 782 cents per kilo carcass weight, which is 5% below the current prices. The aggregated upper estimate is 828 cents per kilo carcass weight.
Thanks, Emily. Before I move on to the next section, in the top right corner of the slide, there's just a reminder that if you have any questions, please scan the QR code and enter our Slido application, and you can ask any question throughout the presentation. We've heard a lot about how the ABS are changing the way that they gather agricultural commodity information, especially since the announcement of the new national herd figure for the cattle sector. Has this also had an impact on the MLA sheep industry projections?
So there's a lot of commentary around the changes to the ABS methodology. This is currently in a review being conducted by the ABS for the sheep flock, similar to the process undertaken in the cattle herd figure. We do not have a published national flock from the ABS for 2023. Typically, we use the ABS figures as a base for our forecast. MLA have used our 2023 estimate as a base for our forecast figure, but due to the lack of data, we've also relied on the sheep producers' intention survey to support our model.
Okay. So following on from that last point, could you walk us through what the sheep producer intention survey could tell us about the current environment and what information was used in your model?
Yeah, so the survey is an essential tool in this projections process. We gather information on flock demographics, producer intentions for their businesses, and more importantly, producer sentiment. Starting with producer sentiment, MLA has been tracking producer sentiment twice a year for 2 years. Across both the sheep and wool sector, sentiment is up in the short term, but remains below where it was in the previous year. The wool sector has remained a negative sentiment score driven by prices and the supply outlook remaining high. So sheep meat producers' sentiment tracks very closely with lamb prices. And so here we see sentiment scores have matched the National Trade Lamb Indicator as sentiment varies state by state. And as you can see on the chart, WA's sentiment is well below the national average.
So does the survey provide any insight into how producers are acting at the moment and moving between breeds?
Yeah, so the survey is our only tool to understand the breed breakdown of national flock. We're seeing a steady move away from merino breeds and wool breeds, which is following the long-term trend. However, current sentiment in the industry, along with persistently low wool prices, are likely to impact the shift and the speed of this shift. So shedders are currently the fastest growing breed. So 7% of the flock is estimated to be shedding breeds, but importantly, nearly a quarter of those producers are stocking shedding genetics. Shedding sheep have managed differently from other breeds, allowing fewer labor investments, with sheep having no need for shearing, mulesing, or crutching. Additionally, accelerated breeding is possible with all year round lambing, enabling 3 lambs across 2 seasons in some cases. So this will allow industry to increase our lambing capabilities from a smaller breeding ewe base.
So whilst we're talking about breeding ewes, what does the survey tell us about the current breeding flock, and what does it mean for the outlook of the flock as a whole?
So our survey determines the national breeding ewe flock's size and location. Despite significant sheep turnoff over the last 12 months, we've seen that the retention of ewes has led to a growth in the breeding ewe flock. The data was a significant contributor to the updated forecast. We can see the proportion of the flock is held across New South Wales, which has had a generally good season. Paired with the lift in breeding ewes, MLA believes the flock has largely been in a maintenance state over the past year rather than the beginnings of a destock.
Okay. Moving back to Erin, given what we've heard about the macro issues and assumptions in the projections and the current position of the breeding ewe flock, what is the forecast for the flock out to 2026?
Sure. So as Em mentioned, the flock is operating at this post-rebuild peak, so staying relatively flat. MLA, if we just run to the next slide, MLA estimates the flock on June 30 was 79.1 million head, and this is a lift of less than 1% on last year. Back in March, we expected elevated turnoff to impact the flock size. However, understanding the demographic makeup of the flock, we believe industry is operating at a higher base than what we initially thought. So while we have seen record turnoff in the first half of this year, that ewe retention has led us to starting from a higher base, producing a relatively stable cohort. The positive conditions across the densely populated New South Wales that Em mentioned, it's caused a delay in any kind of national destock and a maintenance of the flock at its current size. When we look forward, producers will begin to turn off older rams and ewes, bringing down this breeding base. However, as we heard before, the changing breeds and shifting genetics are going to move industry towards stronger turn-off capabilities, which means that the reduction of the flock, will be more subdued. So looking ahead, the flock is expected to ease 3% next year to 76.9 million head, and then ease a further 4% to 74 million head the following year. So under the assumption that we don't experience severe drought conditions, the flock isn't expected to enter a substantial destocking phase and will remain above those 10-year averages.
Thank you. The ABS second quarter data came out recently showing Australia had slaughtered more lamb than ever before. Moving forward, is this kind of production sustainable, and what are we expecting to see over the next few years?
Yeah, that financial year lamb slaughter was a very impressive figure, running 27.5 million head, and that was 18% above the previous record that was in 2016. So this jump in lamb slaughter is probably the biggest indication of how the sector is changing. It's also an indication of our current capacity. So in earlier projections and since COVID, we talked a lot about labour constraints, limiting the capacity of processors, and then it seems now that labour is less of an issue and processors are able to operate at levels that we haven't seen before. If we see input prices remaining relatively stable, that being livestock prices, labour prices, electricity, combined, we should see combined slaughter over the forecast period grow and then remain flat. So lamb slaughter this year is forecast to lift 11% to that 27.7 million head, which would be another record year. And then more recently, this year, we've seen a slowdown of lamb supply across the third quarter, and that was mainly the delay of new season lambs. But once the new cohort enters the market, we'll see processors lift once again. Moving on to 2025 and 2026, we should see a 5% decline next year, and then another 3% decline in 2026 to 25.5 million head. And this just reflects the new operating environment.
Right, so we're really seeing a huge supply of lamb. What is the outlook for sheep, and what will happen to the retained ewes?
Yep, so in 2024, sheep slaughter will lift to 10 million head and then lift again the following year to 11.3 million head. Our expectation is that this large ewe flock and older breeding ewes will need to exit the system in some way and at some point, and that'll kick off from now and next year. So as producers push to turn off their older breeding stock, processors will absorb this, which will elevate sheep slaughter, though this will maintain combined slaughter rates with the reduction in lamb slaughter next year. Sheep slaughter will then ease to 1.1 million head by 2026.
Okay, thanks, Aaron. So you mentioned sheep and lamb slaughter will reach record levels in 2024. How do you think this will impact carcass weights over the next 3 years?
Assuming that longer-term decline in the flock is not influenced by major climate events, so drought or intensive wet, carcass weights are expected to remain relatively stable over the forecast period. The long-term trend is for continuous growth in carcass weights as producers become more efficient, invest in genetic and changing breeds. And as slaughter is expected to hit records, we'll see a slight ease to that carcass weight to 24 kilos this year. Then over the next 2 years, lamb carcass weights will grow, coming in at 24.5 by 2026. And then sheep carcass weights are expected to ease to 24.9 kilos this year, and then lift on trend to 25.1, and then tip 26 kilos by 2026. So even when considering the level of supply through processors, carcass weights won't ease to levels seen in drought-driven destocks. Investments in supplementary feeding have enabled producers to maintain finished weights during some of these difficult conditions.
Okay. And how will these new slaughter volumes and carcass weights impact production of sheep meat?
Driven by that elevated slaughter throughput, MLA is forecasting a lift to production, once again breaking our 2023 record. So this year we expect production to reach 665,000 tonnes, which is 11% up from last year. Moving forward, it will ease 4% next year and then down again to 625,000 tonnes in 2026. And mutton production will grow over the forecast period, lifting only slightly to 249,000 tonnes by the end of this year, and then lift the 14% next year with that increased slaughter, and then remain stable to just under 290,000 tonnes in 2026. This 26 figure would be the largest mutton production year since 2001.
Thank you, Aaron and Emily, for the domestic overview and forecast for the sheep sector. Before I move on, just a friendly reminder again that the QR code in the top right will help you go to the questions through our Slido app. Now that we've covered the domestic environment, we'll look directly to the next question for Tim. Can you please explain to us what the outlook for live export industry looks like over the next few years?
Our live export forecasting is fundamentally supply driven. That is, we look at the current and historic position of the flock and then forecast out from that position. So while we do take things like technical access issues or overseas demand into account when we're putting the numbers together, they aren't at the heart of the model. Instead, it's primarily supply driven, which is then coloured by the demand environment that the industry is operating in. So with all that said, we expect live exports to fall to 528,000 head this year before lifting to 650,000 head in 2025 and 700,000 head in 2026. Unforeseen maintenance activities on key livestock vessels caused disruption in the first half of 2024. But disruption to this trade, we don't expect this to remain an issue for the rest of the year, but disruption to trade has already had a negative effect on 2024 volumes, which will then recover in 25 and 26. In general, we expect that there will be sufficient numbers of sheep being turned off in WA over the forecast period to account for these volumes, and demand for Australian sheep in market remains robust.
Thanks, Tim. We've heard that production is expected to lift. Where are we expecting this extra production to go?
We're expecting that some of it will stay in Australia. In the year so far, Australian lamb consumption has lifted 9% on year-ago levels. And for 2024 as a whole, we expect that domestic consumption will rise to 213,000 tonnes. With that said, most of our sheep meat production is exported, and we forecast that trend to continue. In 2024, lamb exports will rise to 371,000 tonnes, while mutton exports will rise to 211,000 tonnes. These will both be record export volumes in a year. In 2025, we expect lamb exports to fall slightly to 350,000 tonnes, as lamb slaughter moderates and production eases slightly. This will continue in 2026, with exports falling again to 335,000 tonnes. It's a different story for mutton, with record exports over the entire forecast period. In 2025, exports will rise to 284,000 tonnes, and in 2026, they will rise again to 289,000 tonnes.
So, given the increase in production exports, what is the economic outlook for lamb and mutton in our export markets?
Looking at the outlook in our key markets, there's an odd tension in the figures, where incomes are rising in real terms, but consumer confidence is weaker than you might expect. Consumer sentiment remains below trend across most of our key markets. This is most evident in China, where consumer sentiment is tracking about 10 points below trend. But it's also true in Australia and the US, where sentiment fell in the middle of 2022 and has stayed below trend ever since. With that said, spending has been rising despite the weaker sentiment. Strong consumer spending in an environment where sentiment is weak means that exporters are well positioned if and when sentiment improves. In particular, inflation has been falling in most key markets, and high inflation appears to be a key driver in sentiment. So as inflation falls, this should improve the macroeconomic outlook in our key markets.
So looking across to our neighbours, New Zealand is a key competitor in the sheep meat export space. Can you please explain their flocks dynamic and what it means for Australia?
So according to Beef and Lamb New Zealand stock number survey, the New Zealand sheep flock has been estimated at 23.2 million head in July 2024, which would be a 4.3% decline from 2023. The breeding ewe flock has also shrunk by 2.9% from 2023 levels. This continues a long-term pattern of decline in the New Zealand sheep flock. This hasn't been seen in export figures. Instead, exports have held relatively steady while production steadily eases, meaning there is less lamb available in the domestic market. We are now at the point where New Zealand routinely export 85 to 95% of sheep meat production. This means that declines in production will have a fairly direct impact on exports, as domestic consumption volumes aren't really large enough to moderate that difference. Beef and Lamb New Zealand forecasts a 4.8% decrease in the spring lamb crop to 19.3 million head. Upwards of 85% of the New Zealand lamb crop is slaughtered as lambs, so the smaller lamb crop is likely to translate into lower slaughter. Beyond that, there is some prospect for an increase in the flock size, with reasonably good seasonal conditions and a lift in producer prices over the past few months as supply has tightened up. But at least over the next year, it seems very likely that New Zealand exports will be lower. The current forecast is for lamb and sheep meat exports to decline by 7% in year-on-year terms over the coming season. This is good for Australian exporters, as it makes the competitive landscape more favourable.
Okay. Well, thank you, Aaron, Emily, and Tim. We'll move on to the question section of the presentation. We've had quite a few questions come through, so we'll make sure that we try to get through all of them, but we cannot promise. So if we do not answer your questions, please feel free to reach out to the team a little bit later. We have our first one. Aaron, are you able to help here? Is there a correlation between higher mutton sheep slaughter and a lower flock size and vice versa?
Yep. So when we look into kind of processors choosing between sheep and lamb slaughter, a lot of that is influenced by price. So processors are able to, if sheep prices are low, processors will likely slaughter a bit more mutton. And then, yeah, vice versa. If sheep prices are high, they'll move back to lamb. With our model, you have your breeding ewe base, and then they have to exit the system somehow. So when we see higher mutton, that is a portion of that is that breeding ewe base, especially as we move more to sheep meat breeds. So yeah, as those sheep, mutton animals flow through to processors, we see that as a bit of a decrease in that breeding ewe flock, which does impact your natural increase because of those joining rates. So yeah, we definitely have to take into account the price, and then that'll influence what processors are slaughtering, and then also supply. So if we have a lot of sheep coming through, processors will take them, and then that'll hit that base. I hope that answers that question.
Very good. Thank you, Aaron. Our next one is off to Tim. Does the US beef industry situation have any correlation with higher sheep meat exports to the US?
Yes, it does have a correlation, because the effective result of the constriction in the size of the US herd is lower beef production over the next couple of years. And so that means there's kind of a reduction in total protein availability. That means beef retail prices in the United States are at the moment really quite high. Now, a lot of the lamb in particular that Australia exports out to the United States is marketed as a premium product, and is the result of quite a long period of kind of market development in North America. And so the lift in beef prices has effectively means that lamb, either in food service or in retail, ends up being more competitive, relatively speaking. So because there's less protein in total, it then drives demand for other types of protein. That includes lamb. And that, has an effect both globally, because it's reduced the amount of kind of total globally traded protein, but particularly in the United States, it's a positive thing to see.
Thank you, Tim. Emily, we've got a question here for you. There appears to be about a 15% difference between the overall NLRS voluntary weekly figures and the official slaughter number. Is this consistent in lamb and sheep?
Yeah, so it is quite consistent for lamb and sheep as well. We do see that 15 to 20% drop difference between the NRLS versus ABS figures. And so that's very much expected with those slaughter numbers that we forecasted for the forecasted period.
Okay, thank you, Em. Tim, do you have any insight on what's driving the very high lamb exports to the Middle East this year?
Yes, there are a couple of different things that are occurring. The first thing to note is that it's been quite dry in a lot of the kind of domestic producing areas in the Middle East and North Africa region. So a lot of that region is, usually quite dry. A lot of it's desert. But in a lot of the places that would usually engage in broadacre agriculture, they've been having really quite dry or in drought conditions over the past couple of months and years. That's depressed production and means that there's greater import demand. And so then at the same time, with higher Australian supply, 2023 was a record year for total sheep meat exports in Australia. That means that we're able to supply those markets when they're short. And that then, just from a supply perspective, has a particular impact. But then the second thing to note, outside of the purely supply lens, is that a lot of the markets in the Middle East and North Africa region, I'm thinking here in particular of the UAE and Saudi markets like that, have seen quite a quick development of quite sophisticated food service sectors, and modern retail and all of those sorts of things. And so demand for potentially more branded product, and product that can be used in food service has been lifting over the past couple of years. So as those markets continue to develop, and as those kind of consumer trends continue to move forward, Australia's ability to provide lamb and mutton that's consistent and able to be used in that way makes us well positioned to export more volumes into those markets. And we've seen some of that already happening.
Perfect. Thank you, Tim. Tim, I'll just come back to you now again. We've had a lot of questions come through about the live export in WA and its impact on the sheep projections. Would you be able to give a summary of what we've done to handle this and go from there, please?
So in terms of how live exports specifically sit in the projections, I think the first thing that we should note is that the forecast period is out to 2026. And the ending of the trade is not until 2028. So in that very direct way, where the forecast window sits outside when the cessation of trade actually happens, which means that there are still going to be volumes exported over that period. Now, in terms of how it impacts the projections, there's kind of both the supply side, so what's happening in Australia, and then the demand side. The demand side is a little bit more straightforward, so we can start with that, just in saying that from our discussions and from our consultation, we've seen that demand in market remains quite strong. There is interest in a lot of our key markets and a lot of the live export markets that we usually export to, but also importer interest from, say, Morocco to import more sheep. So on the demand side, we see that that's looking fairly strong. Now, on the supply side, again, this is a supply-driven sort of forecast. And what we'd say is that if there is the supply available to be turned off, given that there's nothing happening on the demand side, we'd expect that the amount available to be turned off more or less is what would be turned off. And so that's the number that ends up being in the document as the live export figure. Now, in terms of shifts in producer behavior or anything like that, a lot of that information is then essentially covered in the sheep producer intention survey when we're asking about future intentions, and that sentiment figure captures a lot of the kind of questions around the cessation of the trade in general. So we have considered it in generating these numbers and when we're putting the document together. But yeah, because demand remains quite strong in market and because there will be supply available, that's where those numbers come from, and that's how we arrived at those figures.
Thank you, Tim. Great summary. Erin, we'll just pass to you. Why is the sentiment still low for sheep?
So, very interesting question. I might follow on from Tim on that live export as it comes into sentiment and sheep producer intention survey. So another bit of information that we can get from the sheep producer intention survey is drivers of decision making. And so we do know that government and policy decisions had a 19% impacted 19% of producers' decision making. So that's just another thing that we took into consideration for these projections. Now onto sentiment. So sentiment has finally made it back to positive, but does remain quite low to where it was when we first started tracking sentiment a couple of years ago. Like Em mentioned earlier, it tracks very, very closely to prices. So since prices have recovered, that sentiment has come back up. And then on that chart that we saw before, prices have come above where they were when we did that May survey. So it's very possible that sentiment has also increased with prices. The other thing that we know in fact impacts sentiment is weather, climate events, and policy decision making and such. So depending on how seasons pan out, that will also have an impact on each of the state-by-state sentiment levels. But yeah, it's positive news that prices have come back up since our last survey, and we're probably likely to see that sentiment come back up in our next survey across October.
Thank you, Erin. Over to Tim. We have a question here, and thanks to whoever submitted it. Obviously, watched both webinars, which is great. They're looking at what, apart from New Zealand, what other countries globally are big sheep producers?
So, from memory, the biggest sheep producer in the world, or sheep meat producer in the world as a single country, is China. And then if you count the European Union as a single country, depending on the year, they'd be the second biggest or the biggest. And then there's quite a large gap. And then there's a number of countries that are producing quite a bit of sheep meat every year. I suppose the point to note here, though, is that Australia, in global production terms, is not actually a massive producer of lamb or mutton, right? The thing that makes Australia distinct is that we export a large portion of our total production, whereas the vast majority of sheep meat that's consumed globally is consumed domestically, right? So China is the world's largest producer of sheep meat. They don't, to my knowledge, export any meaningful amounts of sheep meat. And so, yeah, whereas Australia does. So in terms of major producers, it'd be China, then the European Union. In terms of major exporters, who we're probably more competitive with, it's Australia as the largest in the world. Then it's New Zealand, which is the second largest exporter in the world. And then after New Zealand, it's going to be, again, sort of depending on the year and depending on the period, a combination of the UK, Uruguay, the European Union, and potentially then, again, depending on, seasonality and how things are going and how you count it, some countries in the Middle East or some countries in kind of southern Africa. But in terms of the global trade part, the big majority of global trade is made up by Australia and New Zealand.
Thank you, Tim. And we have a question here for Erin, and I'll try and sort of summarize this. Has the intention survey tried to track any link between low sentiment to retain sheep and the use of handling technology on farm, I think?
Yeah, I don't entirely understand, but get in touch through contact details. I will give a bit of an overview of how we ask those sentiment questions in the SPIS though. So we have like a headline question that says, what is your, how are you feeling about the sheep meat industry and wool industry? And it's positive, negative, along a scale. We do get information around off-farm and on-farm factors impacting decision making. So that's where we can get a bit more of that detail. They're on the final pages of the survey reports. So we know that for both off-farm and on-farm, we have weather and seasons as number one, prices of livestock, feed availability, input costs, those government policy interventions, and then something that crops up a lot is personal circumstances, which includes workload and handling, or a ability to handle, which might come into that handling technologies. But then, yeah, things like labour, and it's got a really good breakdown of how producers, like what they take into consideration when making decisions on farm and off farm.
All right, appreciate that, Erin. Well, we thank you so much for coming along today. And thank you to Erin, Emily and Tim from MLA's Market Information team for their contributions. If you could please provide us feedback as you leave using the QR code currently being displayed, or through a form, or through a form we'll email you after the closure of the webinar. We'd really like to continue to use these webinars to share our insights, and by providing feedback, you'll help shape the future of these events. Just a final note here, the recording will be made available shortly, which can be accessed by visiting the MLA website or via YouTube. If you'd like a PDF of the slide deck, we can provide that upon request. And finally, if your questions were not answered today, please reach out to the market information team and they'll be more than happy to help. Thank you so much for joining us today and have a great day.